Hey guys, what's going on? It's your big dreamer and doer G Dinero coming to you today with another TA Tuesday. But first, remember, none of this is tax, financial, legal investment advice. It's your buddy G Dinero helping you to be able to understand the charts to increase your financial literacy. That way you and your family can be on that path to financial freedom. So with no further ado, let's jump right in. All right, today we're going to go ahead and start with the Bitcoin TABI model. The Bitcoin TABI model is still yellow. What does that mean? That means we're still kind of in a neutral zone. Even with the pump in Bitcoin recently from these lows down in the $75,000, $74,000 range, popping all the way back up to $95,000, a $20,000 move over the last couple of weeks. Even with that kind of move, we're still in a yellow zone. So all signs are showing that it's kind of in that neutral zone. It's not overheated. It's not too far lower than it should be right now. It's right about where it should be per the Bitcoin TABI model. Moving right along, if we jump into the Bitcoin daily chart, if we're taking a look at the Bitcoin daily chart, you can see this is the long-term linear regression channel up here. This is the upper bound. Here's the lower bound. Here's the midline, and we are cruising right along the midline for the last week or so, going on either side of this light green line that you see me tracing right here. That seems to be the kind of the line in the sand right now. We're not on the upper side of this linear regression channel, so we're not overheated in relation to how we've been in the past. We're also not oversold compared to how we've been in the past in the lower region. I mean, we've been down here in this lower region for the last good couple of months, since the beginning of March, end of February. We've been down in the lower half of this long-term linear regression channel. Short-term one, we did finally break out of it right here on the 23rd of April, so that's good to see. Also, we're right here at almost the point of control for the last several months. That means the most number of tokens that have exchanged hands is right where this blob is right here. If I were to use this drawing tool right here, this blob, we're right there, and that's where the vast majority of tokens have exchanged hands, in between those two pink lines that I've put here. So that's going to be significant resistance as we try to break back through that and go to the upside, right? We did fill in down here at the bottom. Notice this big spike of volume. So as soon as we got down here to that $75,000, $76,000 range, which coincided with the 1 year moving average, the buyers stepped in, and you can see that by all that volume that I'm circling right here on the right-hand side of the screen. So bottom right now, 75. Top right now is up here at about 97, 98, 99. We've got to break through that. Once we break through that chunk that we're in right now, it's really almost a $10,000 chunk between 100,000 on the top side and 93.5 on the lower side. That's where we've got to break through. So I guess that's $6,500 worth of volume that we've got to break through. Next up is looking at it on the 4-hour chart. This is Bitcoin now on a 4-hour chart. What does it look like from a mean reversion standpoint? Well, we're pretty much right back at the mean. We were very overheated back a week ago Wednesday. So last Wednesday, about 1 week ago, we were very overheated. And that's when this powerful move started to the upside. I had said that I thought that 91.5 would be significant resistance. We went right through that like a hot knife through butter. It didn't stop and went all the way to this midline that I've been talking about on this long-term linear regression channel. You can really see it clearly here, riding along this green line right here. We did go back and retest that 91.5 on Thursday of last week, almost retesting it again right here on Sunday when we pulled back to about 92.5, almost 93. Again, RSI is midline. Your MACD is midline. 200-day moving average has increased now and is up at about $90,000. That's crazy to think that Bitcoin's 200-day moving average, meaning the average price it has sold for over the last 200 days, is now $90,000. And that coincides with almost the 100-day, which is at $90,500. And right in here at the 78.6% fib levels, that's at about 89.3. So we've got a lot of support right here in this 89.5, we'll call it, all the way up to $92,000. We've got a lot of support in that range right now. Resistance to the upside, again, if we were looking back at that daily chart, we've got to break through the 100. That's our resistance to the upside, but it really kicks in right at around this $96,000 level. So we'll probably spend a little bit of time there. If you look at the Bitcoin, the Solana Bitcoin chart, you'll notice that we had dropped out of the long-term linear regression channel. This is a daily chart, and you can see this is the lower edge that I'm tracing right here. We had dropped down below it and tagged the bottom of the shorter-term linear regression channel right here last Wednesday, spiking back up into the long-term linear regression channel and just kind of skidding along the downside of it, testing the bottom of it, also testing the 50-day moving average that you see right here, and then the 38% fib level. That seems to be the bottom right now with this pair, which is 0.0015. So that's 0.0015 Bitcoin for every one Solana. If you were to look at it the other way, I think it's like 640 Solana for every one Bitcoin, somewhere thereabouts. Don't quote me on that. It's in the 600s. It might be in the low 600s. The way you would take and find that out is take 1 and divide it by whatever this number is on the right-hand side. So take 1, divide it by 0.0015587, and that would give you how many Solana per Bitcoin. To the upside, we've got the 100-day moving average is here at 0.0175-ish, and the 50% fib level is about 0.0018. So that's going to be our resistance to the upside. I did see this start to turn, but now I'm a little concerned that the trend is flat. So it looks like Bitcoin's going to be the narrative right now, at least in this short term. Solana, I bet this changes big time as soon as those ETFs get announced, which is supposed to be sometime later this year. So let's take a look at the Solana chart itself. And if we look at the daily chart and we take, again, a good look at this VRVP, the Visible Range Volume Profile, you'll note the point of control over the last 6-7 months or so has been right around 125. It makes sense. Anytime we've gotten anywhere near 125, buyers have jumped in like crazy, right? And bought up all the supply right here at this 125 level. We did have support, or we do have support all the way up to about 145 right now. So there's spots in here where we skip through, $1 or $2 ranges. But for the most part, what you see right here on the screen, and again, I'll circle it just to pull your eyes in, that's a large clump of volume that should act as support right now. Resistance, next step up, once we break through this 151 level that we've been talking about for a while. That $150 range on Solana has been the line in the sand for several months now. Next resistance up is going to be right here, starting at about 165 and extending up to about 170. You'll notice there's a nice chunk there of volume that we'll have to work our way through from a VRVP standpoint. Fibonacci levels, 50% is right here at 150, 151 to be exact. 61.8's up there at the 185, which is basically in line with where the 200-day moving average is for all intents and purposes. So that will be our resistances on the way up, the 100-day, the next VRVP level, as well as the 61.8 and the 200-day moving average. We are slightly mean reverted to the upside on the one-day chart. Same thing with RSI, slightly mean reverted to the upside. If we go to the 4-hour chart on Solana, 4-hour chart, we're right here at the midline. So if you take a look at that, it's kind of ironic that even with that big impulsive move that we saw with Solana over the last couple of weeks, we're now flat again on mean reversion. So we're right about where we should be is the way to interpret that. Same thing with the RSI. RSI is right there at 50 right now. So right there in the middle of the range. If you notice, again, this is that long-term linear regression channel that I was talking about right here. This is the lower edge of it. And we were testing the bottom of it, dropped out of the bottom, back in, tested it again here, tested it here, finally back up in it again, and now testing the bounds of the short-term linear regression channel. So we're right up at the edge of that. What does all of that mean? It means this is that area of significant resistance. All things are telling us that 150 is the difficult line that we've got to break through right now. Once we break through that, it's going to be relatively quick sailing up to 180. There will be, like I said, between 165, 170. There's some volume we've got to churn through there. And then I see us getting back up to 180 very quickly to get back up to this 200-day moving average, and then 185 where the 61.8 fib level is. That'll act as the next major resistance on the way up. Support right now, I would say at the very bottom would be 130, which is where this the 50-day moving average is. Again, don't place any perp trades based on that. That's just my interpretation of the chart right now. Next up is the daily Tesla chart. If we take a look at the daily Tesla chart, it's no wonder that we've just kind of sat on this 250 level for the longest time before finding some support there and springing off of it, because there was a ton of volume there. And if we drop down to the next line down, you're looking at 220. So between 250 and 220, there was a ton of volume at both of those levels. Those are the two strong levels of support. So right now to the downside, 220 would be the support at the very bottom. 250 is the current level of support. Current level of resistance is right in here, right around this $300 level. If I went back in time, I'll do that. Let me show you how the difference that the visible range makes. And you'll see that this $300 level, once that populates in, there's a lot of volume all the way up until we get to about 300 right here, 295, 300, and then there's a gap. So 320, we'll blast right through that and make our way back up to this 340 to 350 level once we finally churn through all of this. But breaking through 300 is not going to be an easy task. You can see how many times we've basically gone up to that level. So back here, right in this area here, right here, over here, we almost made it to 300. And then we've been bouncing up to 300 several times in recent history, unable to break all the way through that. You can see it clearly on the 4-hour chart. There's a lot here. I'm starting to throw these support and resistance zones in. That's for myself, so I can kind of have an idea of, okay, we just turned that current resistance into current support, and now we're working on the next level of resistance. So it's helping me to understand that. So if I zoom in, what you'll see, we bounced off of that resistance zone back here. The resistance zone is this red area right here, right about where the 200-day moving average is. We did it again right here. We wicked up to it. We've done it again recently. We're in that zone right now. We spent a little bit of time in it, right up at the 200-day moving average, and rejected right back off it again. I think that's an important lesson in investing. So many people think that these things are just going to go straight up and to the right. And it's when they're doing so, when they have those powerful moves up and to the right, it's human nature for us to think they're just going to keep going in that direction. They don't. They turn around at resistance and pull back and take a breather. Sometimes it's only for 1 or 2 candles. So that might only be for 4 to 8 hours on a 4-hour chart. Other times it may spend some time consolidating there. Like you see right here, this consolidation period lasted from Thursday all the way to the following Wednesday. That's a long period of time. Remember, there was a holiday in there, I think, but that's a long period of time right there for it to consolidate and just basically trade sideways. So 200-day moving average is strong resistance, as is this 50% fib level at 295, as is the psychological level of 300. So this whole zone right here is going to take a little while to get through. We have made several attempts at it already, so this might be the attempt we break through on, but we are very mean reverted to the upside and starting to show some signs of pulling back a little bit. Same thing with RSI. RSI was over 70. It's now back under 70, and MACD looks like it's about to cross over. All things considered, it looks like it may start pulling back at this point and taking a breather before the next leg up. Next leg up for Tesla, my opinion, is going to be near the end of June, maybe early July, if indeed the robo-taxi delivers on time in Austin and is well received by the markets. Let's put it that way. Next up is MicroStrategy. MicroStrategy on the daily chart, what you'll see here is you'll see the point of control is right here at 340. That was that line in the sand where I told you guys We're not breaking through that anytime soon. We had tested it. We tested it back here in March. We tested it again here in April. A week ago, we were banging right up against it, and I said, we're not going to break through that thing. I was wrong. It broke through it, right? And let's take a look on real quick before I go to the 4-hour. Long-term linear regression channel. This is the top line of it here. This is the bottom line. We're firmly up in the upper half of the long-term linear regression channel. The short-term one that we've been in all the way since that 2025 all-time high, we broke out of it, retested it, and we are clearly above it right now. So that's a great sign that we are above this short-term linear regression channel. It's the one that's angling downwards to the side. If we take a look at it now on the 4-hour, you'll note that we are significantly mean reverted to the upside. It took a lot of strength to break through that 345 level like we had been talking about. We did pull right back below it and retest it right here last Thursday. And then on Friday last week, started the explosion, went all the way back up to this next resistance zone, starting in here at about 375 and extending up to about 405. I don't know if I showed that on the... I did not show that on the VRVP. My apologies. So if you look over here on the VRVP, if we use the drawing tool, the brush, right here is that huge group of volume that we had to work our way through. Next up is this giant block of volume right here. So that's going to present a challenge. I anticipate a little bit of a pullback there before the next leg up. Again, I could be wrong if all of a sudden they report earnings this week and it's phenomenal. I think it's at the close of business on Thursday. If those results are phenomenal, all things, gloves could come off. This thing could skyrocket. But for right now, that is the current resistance zone. We turned the previous resistance zone, which was down here, into support. That was between 340 and 320 and 350. We have retested it, so that should act as support right now to the downside, this 350 range, all the way down to 320, anywhere in that range. When I say support, it means this thing could come back down and sit on support and then make its way down into the zone before going back up and retesting this resistance up here. And again, that's not exactly what I expect to happen, but I do expect us to chop around in between these two for a while, wicking up into the resistance zone and wicking down into the support zone on MicroStrategy. And again, mean reverted to the upside. RSI was through the roof back here. If you look way back here, spent a bunch of time over 70. So that's telling you the asset was very overheated. Oftentimes that involves taking a breather. Of note is that we were below the 200-day average on the 8th of April. So 3 weeks ago today. 3 weeks ago today, people were worried as heck about MicroStrategy, and it was hitting $230 a share. 3 weeks later, it's skyrocketed and is hitting almost $380 a share. That's almost a 150-point move in literally 3 weeks. That's how fast these things can move. So be careful if you're selling covered calls against it. You've got to be prepped and ready to roll those suckers. Waiting till the last minute to do so, because if you wait till the last minute, you let all that extrinsic value bleed out of them. You don't have to pay for as much time value that way, but you don't want to let them get too deep in the money either. Finally, NVDA. Oh my gosh, all of that, right? Next up is NVDA. NVIDIA, we broke below the August 5th low for a split second, again, about 3 weeks ago. Found support there, had a solid buy signal, and have, for all intents and purposes, traded sideways since. Yes, we blasted all the way up to 115. Yes, we dropped all the way down to 95. But it's basically becoming less and less volatile. You can see that on this mean reversion down here. This is on a 4-hour chart. The mean reversion is swinging a whole lot less than it was back over here. Over here, big violent swings in the mean reversion. Now it's starting to kind of coil up a little bit, finding its home in between 100 and 110 for all intents and purposes. 61.8% fib levels acting as significant support down here. That's around $100 a share, right around $100 a share is the support level. Resistance is this 120. 120 is significant resistance, although we haven't even made it past 115 recently. But 120 to 125 is the next level of resistance on the way up. things are looking good. A lot of this one's very dependent on tariffs, very dependent on the China situation and the quote unquote trade war in between the two countries right now before I think we see a resolution. So this is a long-term play for me. I'm in NVIDIA, not for the next 3 months, 6 months, but for the next 3 to 6 years. This is a long-term play for me, and I think it's going to do very well over the next 3 to 6 years. Holy smokes, guys, that's a lot of information. I know if you like what you see, make sure you give this video a like. Comment below. Tell me, what did you learn today? What did you like best? Also comment, what else would you like to see? What other kind of content would you like to see? Make sure you're subscribed to this channel. Also, share it to other people. Share this YouTube channel out to others so that they can increase their financial literacy as well. Also, if you haven't already, book a course with me. You'll learn TradingView and technical analysis just like I know it so that you can make more well-informed decisions in your investing journey. I also teach a course on understanding options where you can learn everything from the Greeks and terminology to buying and selling calls and puts, so that you can grow your bag, hedge your bag, make a weekly or monthly income, whatever you'd like to do with options, the choice is yours. But I teach you how to do all of those things and more, so you can book one of those courses with me or an individual appointment at G Dinero Coaching. And remember, this is G Dinero. I'm here to help you increase your financial literacy so that you and your family can be on that path to financial freedom. Have a wonderful Tuesday, and we'll see you guys soon. Take care.